Hello and welcome to Business Today Television. I'm Siddharth Zarabi, and with me today, Saugata Saha, the president of S&P Global Commodity Insights. Welcome to the show. Good chilly morning, Saugata, that we are having here at the World Economic Forum in Davos. And you've been here. It's 2023, and the big question that everyone is asking, what's likely to happen to the commodity market in 2023?
Firstly, Siddharth, thank you for having me. Delighted to be here. It's exciting to talk about the commodity markets. It's been very exciting, and the question on everyone's mind, as you said, is what's going to happen in 2023. I'd start by saying that 2022 has been a bit of an atypical year, right? You saw severe dislocations in demand, you saw geopolitical activity, and you saw bounce back from COVID lows and demands from 2021 and 2020. So for 2023, I think it's going to be a story. Our researchers say that the story is going to be quite different across the world. If you look at oil, which is crude oil, which is kind of one of the largest commodities and energies everyone's focused on.
Tell that to people in India.
Exactly. The global story is that we think the price is going to be somewhere around $90, but there's going to be a fair amount of volatility, and there are situations in which it could go down to as low as 70 if there's a global contracted recession, or it could go up to as high as 120, right? And the biggest
that's quite a wide range.
It is a wide range because there's a few factors that will play into this. The biggest one out there, Siddharth, is going to be around how fast China bounces back from the lockdown they've had. All the indicators we are looking at, macroeconomic and demand indicators, seems to show that it's coming back fast, which will indicate pressure on oil. But that's the big story. We've got to watch that carefully. And go ahead.
Just a quick interjection. So around 80 now, but you just told me 70 to 120. That's over a $50 span. That's like very, very significant from an Indian fiscal standpoint, and we're just a couple of weeks away from the central government budget. So what should Indian policy makers be budgeting for the Indian fiscal year, which starts the 1st of April? You're a Kolkata boy. What should they be sort of budgeting with? What kind of crude number should they be working on with for the whole year?
Yeah, I would encourage us all to think about kind of $90 as a median case scenario, which we should all think about. But, in today's volatile world that we live in, all business leaders like us and all policymakers, everybody works with scenarios. And by the way, that's what we do with our research as well. There's one scenario, it could be as low as 70, right? But there is also a scenario, it could be as high as 120. And that is not a low probability scenario. I'd say it's a low probability scenario, but not a impossible scenario. So I would say policymakers across the world, including India, should really be thinking about a scenario where, if all goes well, it could, go the year around $90 a barrel. But there are scenarios you could end up at something like 120. If there's big, unexpected geopolitical activities, or if there is a massive splurge in demand in China. And look, the other thing that's going to weigh in on demand and supply over not just 23, Siddharth, but also 24 and 25, is how countries and policymakers think about the trilemma, as I call it, between energy security, energy transition, and energy affordability. And all three are important. And if 2022 has taught us one thing, all three are important.
Absolutely. And 2022, for the Indian context, also taught her that there is an option called Ural crude. You expect that to continue, and the government of India being able to reduce its overall sort of fiscal burden as far as crude oil is concerned?
It's not just crude oil. It's crude oil, it's derivatives, it's fertilizer. And, we expect that policymakers across the world will look to balance their both secure supplies and look at affordable sources. And we expect that India is going to be no different. But again, I'll go back to what I said. If 2022 taught us one thing, it's that just thinking about energy prices or energy affordability by itself doesn't solve anything. You've got to think about all the security is equally important, right?
Absolutely.
What good is affordability if you can't get the crude at that price? Or what good does it do for long-term policy if there isn't a transition plan that is reasonable? And by the way, India has made some incredibly good strides in there. One of the things I'm personally very bullish about is the hydrogen policy, right? And the $2.5 billion spend that's been announced. Now, in the grand scheme of things, it's small money. But, it's a country with 1.3 billion people, incredible engineering and science talent. And I can't see a situation in which significant scientific breakthroughs don't come from India, which makes affordable hydrogen, green hydrogen, a reality.
Okay. There's much more to discuss on crude, but we'll move on because that could be a half hour in itself. 2022 also taught much of the world that agriculture commodities can set people back. And this unprecedented spate of inflation, people realizing that they have to pay far more for the food on their table, has also come as a shock. So the energy shock, along with what I would call a food shock. How is 2023 going to be as far as agricultural commodities are concerned?
So agricultural commodities, for most part, will also have some pressure on prices. And agricultural commodities are important because, as you know, for example, in a country like India, monetary policy and fiscal policy can go only so far in controlling inflation directly because a big part of the inflation has been driven by food prices, right? So we think pressure will continue on that, and composition of demand and supply, and also agricultural input prices. And I think policymakers across the world will have to be quite nimble and agile as they think about how to manage food prices, because in most countries, developing especially, energy prices impact a certain segment of the population. Food prices impacts everybody.
Absolutely, and it's the worst tax on the poor. India's policy response in part to agriculture commodity inflation was to restrict exports.
Yeah.
But tell our viewers, and I really want you to explain the global macro backdrop, barring the production that went out of the market from the Ukraine sort of territory and from Russia, what really happened to cause such a widespread shock? It's not that people coming out of COVID started consuming 3 times more. I'm personally perplexed, and I don't follow this very closely.
I think there's a whole host of things that happened. One is, of course, there was some increase in consumption as people started eating out. Production went up, all of that supply, inventory levels came down, etc. There was a rush to fill up inventory levels, etc. There was also some amount of supply chain dislocation. Supply chain dislocations happened across commodity classes, be it shipping, be it inventory, be it sourcing. That was the second thing. And then the third thing is, for certain agricultural commodities, there was certainly interruption of supply because of the war in Ukraine, etc. But it's a whole host of things which kind of led to some of the spikes we saw in prices. And I think there was probably a fourth element which our researchers haven't spent a whole lot of time looking at. But I think there was also some amount of preemptive inventory building, because when prices start going up, everybody starts stock up, right? Yeah. And that's at every level, at the retail level, the wholesale level, and the supply chain level, and everybody wants to build up their strategic inventories.
And India's MSP is one of the largest government stockpiles in the world.
Exactly. And when that happens, that drives up prices. And then it becomes a bit of a self-fulfilling prophecy, because, prices go up and people see that going up and they think, oh, I'm doing the right thing by building up inventory, so let's build up some more. And then prices go up even more. And then eventually these things, sort themselves out. So, yeah, I think a whole host of things.
The broader macro backdrop that most people overseas, the Western economies, the developed world are talking about, is the possibility of a strong recession. No one's even going near that word in India, and thankfully so. What impact would a significant downturn in the developed world have for India?
Firstly, Siddharth, I start by saying that our researchers at this point, they are generally optimistic about the global economy. They are forecasting a mild recession in certain countries, especially in Europe, and really mild recession. China, we think, will grow at around 4.5%, 5% for the year. India is going to continue to be one of the strongest, growing economies at scale. And obviously, that's going to lead to a lot of demand for oil, gas, energy, and all of that. We aren't looking at any severe scenarios around recession. Now, what happens if there is one? And that gets us to the whole question around $70. Can $70 or even lower than $70 a barrel of oil possible? Yes. But at this point, the indicators that we see don't seem to indicate a significant recession. And as you know, and you talk to a lot of leaders in business and policymakers across the world, the scenario we are in today is kind of a little bit unseen ever before, because there is talk of recession. There are some recessionary indicators, but at the same time, labor markets in most parts of the world are incredibly tight.
That's a very good point. Saugata, before we move on, just a quick point. I barely managed to glance through this. S&P Global has created Look Forward. You want to tell our viewers what this is going to be about?
Excellent. Thanks for the question, Siddharth. So we've published, so S&P Global, for your viewers, we are a large global producer of data, research, analytics across financial asset classes, commodity and energy asset classes, transportation, etc. So one of the new innovations we have in place is a research publication that we call Look Forward. It's available on our website, and it brings together the best of some of the best topical research that our researchers are focused on right now. So we just, coinciding with the World Economic Forum at Davos, we published our first issue. And we talk of some of the topics that we've just been talking about. One of the articles in there written by a couple of my colleagues focuses on the commodity supercycle and the fact that every macroeconomic indicator says that we should be getting into one of these so-called commodity supercycles. But at the same time, the prices don't indicate that. We are not in commodity supercycle.
Why is that?
Prices.
Why are the prices not indicating? Is it because there's been a phase of underinvestment?
I think there's a whole host of factors, and the underinvestment goes into certain categories of commodities, in particular oil. But that's the thesis of the article, which is around why, in spite of what we are seeing in terms of strong fundamental demands, there's not enough increase in prices. There's several factors. I'd say the simplest one is that we need to probably all of us readjust our mental models on what is high price, right? To someone who's looked at, take oil as an example, at $120 a barrel recently, or natural gas at $50, $60, $70 per MMBTU. To them, a $25, $30 forecast seems it's low. Why is it not high enough? But to somebody else who a few years ago was looking at natural gas at $10 per MMBTU, for them it's like the price is so high. So I think we are living through many such anomalous scenarios like this. But Look Forward, I would encourage your viewers to it's written in it's not meant for technical professionals who are investors. I would encourage everyone to take a
I'll
look
keep
at
track of it myself. I've always wanted to ask you this since we decided to sit down here, and this is the term peak oil. Because of the transition, now there is a need to move away from oil. So two quick questions. Starting with, if you can pull off out this number quickly. In the last couple of years, or whatever period you would like, has oil drilling capacity increased, stayed stable, or gone down?
So it's increasing over time, right? Demand and supply are both increasing. Our researchers, our forecast is that peak oil in a median scenario, there are various scenarios, won't happen till about 2040, give or take, right? So till 2040, year on year, oil demand and production will continue to increase. After that, it'll flatten out slowly, right? And what's happening? Over
what period?
It flattens out over the next several decades, but it doesn't fall off a cliff. A couple of things happen. One is, where there's a huge change in oil demand is in transportation, right? There'll be newer sources of fuels. But there are some other uses of oil where plastics, fertilizers, it's not really changing. And that mix will change dramatically.
And there are no alternatives there?
There aren't. There
especially for fertilizers, probably.
There could be huge technological breakthroughs over the next 2-3 decades. Who knows? But as of now, none. But Siddharth, the other thing I want to point out, and I'm sure your viewers will also appreciate this. Look, oil by itself is not a problem, right? The challenge is emissions, carbon, and the impact it has on climate, right? And there is a lot of work underway in terms of also working on carbon capture. So I'm not really that pessimistic that oil consumption will fall off the precipice. I think there will be a lot of newer technologies that will come in. There will be a lot of new innovation, hydrogen in particular. A lot of capital will go into driving those innovations. There'll be new winners and new losers. But oil as a fundamental key ingredient to running the global economy, I think will be around for a while.
And therefore, as we wind down the conversation, what is the challenge and the opportunity that India has when it comes to transitioning and preparing for peak oil? Because I'm sure, Saugata, with peak oil, there will be some element of change to pricing as well.
Absolutely. And one of the things that will happen over time is, I was talking about new winners and losers, is there'll be changes in who's producing new forms of energy, who's consuming it. I think right now what you're seeing across the world is a race for everyone to be energy secure. I want to produce it myself. I want to have decarbonized forms of energy transition, and I want to make sure it's affordable. Hydrogen is a good example, or any other forms of energy. Energy affordability is important. And that will lead, especially in countries like India, which are large, have very little traditional forms of energy, to invest in finding the new breakthroughs. And I'm very bullish that we will come up with these new sources of energy. You talk to anybody here at Davos this year, there's a lot of optimism that some of these new sources of energy will help countries like India become hugely self-reliant as far as energy is concerned, and also not just self-reliant. Keep in mind, I mean, this is a bit of people might say it's a provocative point of view, but India could even become a net exporter of some of these technologies, right? Because remember, you can't export, for example, solar, but you can export the solar innovative technologies that make it much more efficient and cheaper to produce solar, for example, or even hydrogen, or hydrogen converted into methane or ammonia. So I think there's a lot of opportunity ahead for industry in India.
What alternative form of energy is likely to win, or will it be a mix?
Oh, that's a great question. Look, I'm not going to hazard a guess there, but I think the smart strategy here is to kind of take a portfolio approach, right? And think about batteries, think about solar, think about hydrogen, the whole gamut, and wind and nuclear. And I think it's hard to predict the winner, and the smart strategy is going to be to have a balanced portfolio. It's a little like, do I want to put all my money on one stock, or do I want a balanced portfolio, ideally in a index, even better if it's an S&P index?
So my very last question, since we spoke about the S&P index and portfolios, you spoke about a commodity super cycle. How long is it going to last, and should investors be looking forward to the same kind of performance that they saw in 2022?
Super cycles.
And I'm not asking for a recommendation.
Of course.
For the record, for everyone.
Yes, and I wouldn't hazard one either. We've got some very talented people who do that. I will leave it to them. But I would say super cycles, when we've seen them in the past, they run typically between 3 to 6 years. And, again, there's a question of what's the start and what's the end. I think if there's one thing I can predict, and I think I'll get this one right, is we will see huge amounts of volatility across markets, in commodity markets in 2023. In general, again, it's hard to generalize, but I think for most commodity classes, we'll see elevated prices. But then the question becomes, elevated compared to what? So I'd say elevated compared to long-term averages, but not necessarily elevated compared to 2022. Hopefully
Absolutely.
That gives some color.
And that is indeed a very nice S&P insight. Saugata Saha, pleasure talking to you. Thank you very much for your time.
Thank you, Siddharth.
That was Saugata Saha, the president of S&P Global Commodity Insights. If you've been watching, thank you very much. We'll be back with more. Do stay tuned in. Goodbye.